Hey traders, Raghee here, and in this free recap video we're going to talk about a topic we began discussing yesterday, which is looking at different times of day as a day trader and really understanding the volatility associated with it. So this is really a great part 2 if you want to view yesterday as part 1. And I'm going to dive into the NQ here and talk about a trade that we took today. And that was what we call the clearing range correction. In other words, we're looking to project lows during a very specific time of day based upon the highs that we create during the opening or clearing range, which is 9:30 to 10 a.m. Eastern. So you'll see I've got some numbers here and some data. This is basically the chart that we set up in the chat room so I can break this down for you. And this is a repeating setup. So once you understand the gist of it, this is absolutely something that you can use again and again. So this is how it worked out. You'll notice I have 744675, and that is the high. I'm just going to move this out of the way here. This is the high we created right up in here. That was a 9:48 a.m. Now you could do this on a 3-minute chart, 1-minute chart, it doesn't matter. This is really more about time of day and price, more so than it is, say, the market structure, the trend of a particular time frame. So this really is not a time frame based setup. You really don't need a chart to do this, you really just need the price. In other words, support and resistance, almost like a tape reader back in the day, right? So 7446 high, and then you'll notice that I have some numbers here, and these are the typical price movement ranges for this time of day. So I'm going to move this over here, and so we subtract 33, 43, and 51. Now these stay fairly static, they'll shift based upon volatility. So it's a 6-month historical look back, and they will shift based upon increases or decreases in volatility. So it doesn't shift suddenly, usually very quickly, unless we see volatility like we saw earlier this year in February. That's the kind of volatility that could really shake this data up. So what we do is simple arithmetic. And what we end up with is a projected low, and this was an alert that we sent out. So here's just another sneak peek on how I communicate the trade. So you guys get an idea of what it is. And then the projected low was 73.14. Now, how do I know when I can calculate this? I'll use a 1-minute time frame. I think it's a really easy way to know when a significant high was left behind. A 1-minute time frame minor high, which is just a 3-candle pattern, which means I need all of 3 minutes, 3 tiny little minutes, to decide that this is a level from which I can start to calculate a low from, right? And by the way, we would have done it earlier here. So we did this twice. So we did it once here, and we projected the low, which was never hit. Then we got a new high, projected the low again, and this time it was hit. And that was the entry long. Now, if I used a certain amount of points to determine how he sold off, you know, we can use that same number of points or the points relevant to 10 to 11 o'clock to project where we exhaust to the upside. And that was where essentially this was the area of exhaustion. So this is where you take profit. Okay, these are all just arithmetic-based calculations and plays on price, volatility, and time. I just happen to be using a 1-minute, so I've got somewhere to sort of visualize where things are going. Now, this is a time frame, time of day, I should say, that I love the most, 9:30 to 11:30. You'll notice I have red here, and this really jives with what we were talking about yesterday in the recap video, where there are certain times of day when I want to slow things down or even flat out avoid. The red is where I want to flat out avoid, hence the no, right? How's that for succinct and clear? No. So I want to focus on the pre-market, or what I call the pre-market, even sometimes as early as 4 a.m. to 9 o'clock. Give the market 30 minutes to gear up for the open. Use the opening range, which is what we did today. And then after 11:30, as the European markets close and the U.S. goes into the lunchtime doldrums, again, just take it easy and wait for the 1:30 reopen, if you will, and play the remainder of the day if that's what I choose to do. We did something very similar on the Russell as well. Those were the two buys today. That's what I felt most comfortable with in terms of this macro, what kind of news this market is digesting. We'll talk about that. We'll talk about Turkey, ECB, Euro, the banks, why I'm long, XLF, and more in the premium video. But I hope this is a great follow-up to yesterday. Check yesterday's video out. That's how we put the trade on here today. And have a terrific weekend. I'll see you next time.